All right, everyone. Hey. Good afternoon, everyone. Excited that you're here. We're also streaming live via LinkedIn Live as well. So come on in. I know many of you are working. We're doing this midday. But I just want to say how excited I am to see new friends and also some old friends here. I see you, Ovita, and I'm glad you were able to attend. So I'm excited that you're here. Certainly, I have a formal presentation for you, but my question to you, to all of you is, why did you sign up for this presentation? What did you hope to learn? So if you're watching me on Facebook or YouTube, you can put it in the comments, or for those of you who are right here with me on Zoom, in the comments, let me know, why did you attend this session? Because I know you're all busy. What did you hope to learn? Let me just make sure I can see everyone's comments. I'll give you just a few minutes. What did you hope to learn? I know if you're like many of the women in our community, they're concerned about the economy, the stock markets, but more importantly, their own personal 401k. So if that's you, then if that's one of the reasons you're here, I really love to hear. So Carol says, ways to prepare for sustaining my lifestyle as I near retirement. I'm definitely going to cover that. Good afternoon, Zena. Great to see you as well. Ovita says, how to protect my 401k funds given I'm just 3 years away from retirement. Absolutely. Well, I'm really going to be challenging some of your emotions and how you may be feeling today, and just share with you why this is actually when the wealthy, that secret 1% that we hear about all the time, actually build their fortunes, right? Now, this may sound counterintuitive, but what I'm going to be sharing with you are some of the insights and the knowledge that I've learned as someone who's been in the financial space, financial services space for some time. But not only that, what the women in WealthyU themselves have learned about volatility and what it represents, and the fact that if you can do what I share with you today, if you can begin to put these concepts into practice, how it will fundamentally change how you look at the economy, the stock market, and your 401k. So here, who is ready to learn why this is the time to really be investing? Who's ready to learn that? If you are in the chat, let me know. In the comments section, let me know as well. Ovita says, I am. All right, well, let me just share my screen with you. As I said, I have a formal presentation for you, but of course, if you know me at all, you know that I can change it up a little bit to meet your needs. So let me just make sure I've got the right PowerPoint queued up. And let's get this party started. I think that's the right one. That's right. Before I get started, can everyone see my screen and the presentation? Fantastic. Okay. Let's get started. All right. So the topic today is recession-proof your portfolio. The question I have for you, how many of you think that we're already in a recession? I'd love to see just what your mindset. How many of you feel like we are already in a recession? Let me tell you. Oh, hang on. I forgot I've got some audio on these slides that I thought I took out. Okay. So I would say we're already in a recession. You're absolutely right, Ovita. Liz, great to see you. Who else is in here so I can give a shout out to you? I can't see your name. Tanika, welcome, welcome, welcome. I'll see you, Carol. Okay. So yes, we are in a recession. And really, what's the definition of recession? It's the way they define it in economic terms is 2 quarters of declining growth. But what we have seen is that inflation, well, we know that. I mean, all we got to do is go in the store and we know that we've seen prices go up significantly. We're seeing interest rates. I mean, mortgage rates have more than doubled. I was just looking at mortgage rates this morning at 7.04 was the average. I mean, think about that. Less than 6 months ago, we were at 3.5%. So yes. Here's all I want you to know is that you guys look like, you've been, hanging in your careers a little bit. And you know that this economy goes up and down. But I'm going to share with you what I've learned about the economic volatility and how you can use it to your advantage. So how do I know this? Well, for those of you who don't know me, a little bit about my background. I've spent over 25 years in the financial services industry. And while there, I learned in working with high net worth individuals, what I learned is that many of them had inherited wealth. And as a result of having inherited wealth, they had access to knowledge and insight that the average person doesn't. Certainly, I didn't come from wealth. But what became really, really clear to me was that what we're told is go to college, get a degree, get a career, earn more income, and that's the ticket to financial success, when in fact, that is not how real wealth is built. Real wealth is built by turning our income into assets. So fundamentally, that's what I want you to understand. And how did I learn that? Well, just a little bit about my own journey. Again, I didn't come from wealth, but somehow I found myself on a fast trajectory at Fidelity Investments and kind of moved up the ranks. And as a result of that, so much of the, I started as a financial advisor, went on to manage the West Coast for Fidelity Investments. And in that role, I found myself with not only our high net worth clients, but also our portfolio managers. But the truth is, I started at Merrill Lynch as a registered sales assistant right when Black Monday happened, right before Black Monday happened, when the market dropped more than 20% in one day, right? Like we're seeing the market over time. Like year to date, we're down about 30%, right? We're definitely in what is called a bear market, right? And a bear market is when we've seen a 20%, more than a 20% decline. So, during that experience, as someone who at that point was just answering the phone and giving quotes over the phone, what became really, really clear to me was that the wealthy, they act totally different around volatility than most middle class folks at. And the way that I know that, I experienced that very early on in my career, is that being in Dearborn, Michigan, where a lot of the managers of the Fords or Chryslers or middle managers owned stock in these companies, when the market declined, they were running and selling their stocks. However, what I noticed later on in the evening is that a lot of the very wealthy clients were meeting with their financial advisors, and they were not selling. They were buying some of the highest quality stocks at the lowest prices, because what became really clear to me, stocks like Procter and Gamble, what were some other, Merck, companies, J&J, companies that have what are considered moats in the investment industry, meaning regardless of the ups and downs of the market, they're still making money. And when those prices declined, it simply gave them an opportunity to buy more. And so because of that knowledge, what I began to understand is that, oh, I had never been exposed to investing or stocks. And so I thought to myself, why is that? I did follow the financial success guide that I was given, and that was college, career, and yet I had never been exposed to investing. And so what I found out really is that, and this is the most fundamental thing you're going to have to understand, is that the knowledge of actually how to build wealth and invest is something that is inherited. Sorry about that, guys. Let me just turn this phone off. Always at the wrong time. So anyway, the knowledge of how to invest is inherited. That's what I want you to know. In the chat, tell me, most of you, how many of you have BAs, bachelor's degrees? If you have a bachelor's degree, say bachelor's. If you got a master's degree, say master's. If you got a PhD, say I got a PhD. If you got an MBA, in the chat, I just want to poll how much formal education you've had, right? Because here's the other thing that I learned, is that there is so much shame because everybody feels like they should know this stuff. But if you didn't get it in your formal education, and I have an MBA and nothing about investments was covered, where would you learn? And so really, as I began to go on and wrote my first book, Confident Investing, a Wealth Building Guide for Women, and then I went on tour. I authored the book, A Purse of Your Own Next. And then I went on tour, and that's me on CNN, because I wanted to start this. I was on a mission to financially empower 1 million women. What became clear to me was that it's not just the knowledge, right? Like how many of you feel like knowledge is power? In the chat, if you believe that knowledge is power, tell me, yes, I believe that. Just give me a yes in the chat. Do you believe that? You believe that knowledge is power? Well, here's what I want to tell you. What I learned is knowledge is not power, okay? So look at this. I wrote all these books, and you guys have probably read Susie. How many of you have read Susie Orman's book, or Linda Bridgeford, Girl, Get Your Money Straight, Girl, Make Your Money Grow? How many of these books have you read? And that's right, knowledge applied is power. And so what I want you to know is that the reason I launched WealthyU was at the urging of my son, who said to me, he said, Ma, you know what, you can do all these presentations, you could go on tour, but people need help. And so what I'm going to be sharing with you today is concepts that the women in the WealthyU community themselves have used to really accelerate their financial growth. And also, many of the women in WealthyU have seen their investments grow at what has been one of the most volatile times of all. Do you all believe that COVID fundamentally changed our economic landscape? If you believe that, put that in the chat, because I certainly believe it. But since COVID, and some of the women are on here on this session, they have seen the level of their assets increase because they began to apply the concepts that I'm going to share with you today. And so that's kind of my journey. And so more than 20 years later, we launched the community WealthyU to actually give the accountability and support and insight and knowledge of how to invest like the wealthy invest. And basically what it requires you to do is fundamentally make a shift in how you view economic volatility. So recession-proofing your portfolio, just briefly what we're going to cover today is the most important aspect or concept of all is making the shift from an income mindset to a wealth mindset. Then you're going to have a little homework, ladies. So you want to know how to recession-proof your portfolio, you're going to take an assessment. And based on where you are, you should be able to come away from this session with some insight in terms of how you're investing. But also what I hope you'll come away with is that the fact that you're gonna, what I say in WealthyU, our WealthyU community, learn how to lean into this fear, right? Not become emotional or panic around it, and really learn how to leverage volatility. Now, let me just preface this by saying, I know you hear people saying, oh, stocks are on sale. Well, yeah, stocks have declined, but not all stocks are on sale. And so it's important that you learn how to discern the difference, right? So there are opportunities here, but there are some defensive kinds of measures that you need to take with your portfolio in order to take advantage of it. So here's the framework that we use in WealthyU to apply these concepts, be able to lean into the fear. I'm not going to go through it in its entirety, but just know that our framework is mindset, a shift to the wealth mindset, and that is understanding how the wealthy are able to take advantage of opportunities. Strategy, most importantly, you got to increase your investment knowledge, because the reason that you're fearful is because perhaps you don't actually know how the stock market works, how to analyze and research your stocks, how to analyze and research mutual funds. And so here you are with this 401k. Now, right now, how many of you have looked at your 401k statements, and have they declined from where they were at the beginning of the year? Okay, that's all I want. You're looking at your 401k statements. They have greatly declined. They have. And they've declined. If I were to look at the last time, market was up a little bit yesterday, but year to date, we're down about 30%. But what I'm going to share with you is the fact that depending upon how your assets are allocated, you should anticipate this happening, right? And understand that it is a function of the cyclical nature of the economy, and the way you win this game is not by being fearful of it, but understanding it so that you can take calculated risk. And at some point, and I know this may sound counterintuitive, really welcome this volatility as a way to reposition yourself to accelerate your financial growth. So shifting, oh man, I didn't realize I had all this audio. Okay, sorry guys, I did some slides around. Okay, so the first thing is shifting from a fixed mindset to a growth mindset by getting the tools, resources, and knowledge of how to take calculated risk. Okay, so what does that mean? That means, how many of you have heard of the work of Carol Dweck, where she talks about someone with having a fixed mindset and a growth mindset? If you've heard of that concept, in the chat, tell me you've heard of the concept of having a fixed mindset and a growth mindset, because it is so relevant to investing. And here's what I want you to know. The reason why it's important, is because many of you are so worried about losing, right? So worried about what you're losing, and you feel like there's a finite amount and that you've got to hold on to what you have. But what you don't realize as a result of that fixed mindset, it doesn't allow you to your money to grow more rapidly. And I'm going to show you those numbers a little later, okay? That the ability to shift to a wealth mindset means that you see opportunity in volatility, and you know that on any given day, the value of something is what it is at that point, but you're not thinking about what it is at that point. You're thinking about the long-term outcome of where you want to be. And I hadn't planned on saying this, but I think it's just a great illustration for everyone to understand how mindset plays such a role in the investment choices that we make and our ability to actually achieve financial independence. Because quite frankly, that financial success roadmap that we were given, college, career, more income, homes, buy things, was never designed to have us, or even to be with an employer and have a pension, was never designed for us to create generational wealth or create or achieve financial independence. And the way I like to explain it is this way. And it's people who have a poverty mindset. They think and manage their money day to day. People with a poor mindset have that week to week mentality. It is about how much I earn, right? And then I spend it all. People with a middle class mindset, and really that was the financial success model we were given, having a middle class mindset, think and manage their money month to month. And in fact, it's even how things are sold to us, like mortgages, like car, how much can we afford of the monthly payment? People with an affluent mindset manage and allocate their resources and have a budget that really runs year to year, whereas people with a wealth mindset think and manage their money generation to generation. And so the difference between those mindsets is the ability to not think about where things are today, but you're investing and accumulating assets so that the more assets you have, eventually the more value and the more wealth you would have. So you're not focused on accumulating things. You're not focused on the value of something from day to day, because you know that value changes, and you know that your ability to accumulate more assets, whether it be more shares of stock, whether it be more shares of mutual funds like you have in your retirement plan, whether it's property that is real estate investments, all of your ability to accumulate assets that are going to appreciate over time is really how you win the game. You win the game. And here's the most important thing I want you to understand is that the way you shift to a wealth mindset and you become less fearful of market volatility is that you increase your knowledge and your experience. You start taking more risk. And that really is how you shift to a wealth mindset, and you are no longer afraid of the ups and downs of the market. And here is an example of that. Like, just if you would have told me if someone would have asked me at the beginning of the year if I thought the market was going to go down, absolutely. And I've been telling everyone in the WealthyU community of that, because the truth is that the market is and stocks are averages, right? So the historical, and I'll talk about that a little later, this historical return on very aggressive stocks is about 12%. And so if you're looking at large cap stocks and they've got an average annual return. Some of you were getting like 17, 18, 19, 20% over 10 years. And you were like, yes, this could last forever. No, nothing lasts forever. It always reverts to the mean. So what happens is then people get all, like you saw crypto and all these people and all these influencers, and they were just saying, I talked to a lady, she told me, oh, well, I'm retired and I'm going to live off of my crypto profits. And I'm like, are you out of your mind? And have you seen the decline in crypto? So my point is that overconfidence, right? This is the greatest risk of loss. That's all I want you to know, is when the market is at the top. People make dumb bets. They start thinking that everything's going to go up in value, and then it starts going down. So here's how people are feeling: denial, regret, fear, panic, and many are feeling despair because they're looking at their investments, they're nearing retirement, or maybe they're not, but they thought they were much further ahead. But all I want you to know is here's the greatest opportunity for gain. And this is what the wealthy see, right? They know that because of all this panic and fear, people are going to sell. And they're not going to sell because of the fundamentals of the companies. They're going to sell because they're afraid. And so it's at this time that you start picking up more shares. And if you're positioned correctly in your 401ks, you're going to be able to do that. And then you're going to understand that, that's simply a function of the volatility in the market. And this is when I have the greatest opportunity to accumulate assets at lower prices. And over time, I'm going to win. If this is making sense to you, in the chat, I just want to make sure you guys are following me. Okay, can I make the screen larger? Sure, I'll make it larger. Let me just make sure I got no more audio in these things. Okay, cool, I'll do that. Okay. For those of you who are like me and have bifocals, let me just, let me take it up a notch, right? Okay, so is that better, guys? Awesome. So this is all I want you to understand, is what I saw very early in my career was the wealthiest folks, those 1% we hear about, they do the opposite of what everybody does. And that's why they win the game. But the reason they're able to do that is because they've inherited wealth. They're getting counsel from private bankers. They're getting access to investments that are not even shown to the average person. You got to be high net worth, and high net worth is considered having investable assets of $1 million or more. Okay, so let's move this train on. So here's the other point I want to make, and that is for people of color. So this is UBS just came out with this survey, and I had this study, and I had the great pleasure of interviewing their head of multicultural investors. And in fact, I have a new show on Black Star Network called Get Wealthy, where you can actually see that interview. And the most insightful thing is this study that I want to point out to all of you, because this is the reason for the wealth gap. I just want you to understand that, is that UBS manages half of all the billionaires in the world, okay? And they did this study, and this is about who the multicultural segments that actually make it into high net worth and have investable assets of $1 million or more. And what is really interesting, and I want you guys to see this. So let's look at wealth creation. For Blacks, 30% of their wealth come from investments, who are in the high net worth category. For Asians, 31% comes from investments. For Hispanic and Latinos, 30%. But everyone else, those 1%, more than 60% of their wealth comes from investments. And if I showed you another chart, what I'd show you is that 65% of African American and the 65% don't own any stocks. 65% don't own any stocks. So that's the reason for there not being more people who are having investable assets. But the other interesting thing about this chart, if we look at Asian and Hispanic, well, if we look at Asians, 44% of their wealth came from earnings, right? Why is that? Well, the first thing I said when I saw this, oh, they're in tech for the most part. And do you know that was very, very true? So the other thing I want to say to all of you is that you have got to position yourselves in careers where you're going to be compensated not just by salary. I want you to hear this, okay? Not just by salary, but by stock options, right? That you are taking advantage of your employer stock purchase programs, okay? And that you are in industries that are going to pay you the compensation so that you can have more discretionary income so that you can invest. So this is really, that is the mission of WealthyU, is to help 1 million women get to that high net worth status of $1 million in investable assets. Is this making sense to you guys? And so there's some specific strategies that if you know you're going, so you can't just be here in lower, you have got to increase your tolerance for risk so that your money will grow. And so here's what I know about many of you, where you are right now, okay? Because these are the women in WealthyU. You're the loyalist. You're the go-to person on the job, hoping that your achievements will be recognized. You're loyal to the company, but you've gotten small salary increases. You love to help others. Many of you are in social organizations. I'm not mad at you because so am I, okay? But the point I want you to understand is that some of you feel like you don't have enough to invest or to contribute enough. You absolutely do. And if you don't, guess what you got to do? You got to move into another role that's going to pay you the compensation so that you can get to those investable assets, right? So any loyalist in the house, did I describe you? If I did, say yes, I'm the loyalist, I'm hanging in here. Here's the insight I want to give you, that people who make the most money change their jobs every 2 to 3 years. So if you've been in a role that long, you got to keep it moving. All right. Now, some of you are the achievers, and this is where I fell in, the role I fell into prior to moving to starting WealthyU. Checked all the boxes, college, career. Certainly, I had already known about investing, and but some of you maybe are dabbling in investing. You kind of know you should be doing more than just your 401k, but you believe you can figure it out everything on your own, right? And you've been to the books, the seminars, all of that. And what you don't understand is that nobody gets to the next level on their own, right? And that the most important thing, and I want you guys to hear this too, it's the people that you're around. The 5 people that you spend most of your time with are going to influence your economic status. So if you want to be able to go to the next level, get comfortable with wealth and investing, you have to move into the right circle. So what I tell women in WealthyU is, are you in a circle or are you in a cage, right? Are you in a cage where you're comfortable and, you look to the side and you say, I'm doing all right, right? Or are you in a circle and everybody's trying to go higher and are supporting one another in doing so? If you're an achiever in the chat, let me know if I described you. Now, some of you are the first in your family to climb the corporate ladder, earn over 6 figures, and you feel obligated, right? To every financial shortfall, you feel obligated, and that's okay. You're privileged when you can help folks, but what you have to understand is that you cannot put your own finances in jeopardy. And I know from WealthyU that many of you do that. That in spite of your 6-figure income, some of you multiple 6-figure incomes, you still don't have enough. You're wondering if you're going to have enough to retire. And you're wondering, what do you need to do to get your financial house in order? And more importantly, with this decline in the market, you're really trying to figure out, man, this is a setback. But all I want you to know, a setback is a setup for a comeback. And I want you to understand that this is just a function of the economy, and that you need to be able to look at this as an opportunity to build wealth. And you may even be her, the late bloomer. You raised the kids, but you didn't start investing for retirement until later. So many of you are playing catch up. And you're wondering, should you pay off debt and then invest? And you're also wondering, how can you accelerate your retirement savings so that you're secure? If I described you in the chat, let me see. I'm the family bank, Nelda said. Yes. Ovita says, I'm the achiever. Carmela says, I'm in between. Ovita says, I know I need help. And here's all I want to say to all of you. The most that you can measure a woman's, specifically financial success, by her ability to get help, right? And some of you are feeling like, and I know this because I've coached thousands of women now, right? Are feeling like I should know more, or you're feeling shame or ignorance. You feel like you should know more. You don't want to talk to anybody because then they'll know you don't know more. It's like a conundrum. Can you guys relate to this? Listen, I know you because I am you. I wouldn't know if I had not chose this as a career, I would be in the same space. So the point I like to make is I am you. I mean, I'm just a woman who grew up without wealth from Detroit, fell into the investment industry and said, wow, I didn't even know this existed. And then I wanted to go out and tell the world. And I've been doing it for years. So many of you maybe saw me touring with Bishop Jakes, maybe saw me in the Purse of Your Own tours, maybe saw me on News One Now. You know that this has been a mission, but now all I want to tell you is I have a real sense of urgency, because if we're not careful, we're going to be a permanent underclass. But the only reason that is true is because many of us have the incomes. We just never learn how to turn our income into wealth. And so the framework in WealthyU, and we've perfected it, is, and it accelerates women's growth, is that first you got to shift to a wealth mindset. You got to stop being fearful. But the way you do that is by increasing your investment knowledge. And then you understand what levers you need to pull, and they're different for everybody. So, don't be looking over there at her saying, oh, I should do this or I should do that. You all have unique opportunities that are standing right in front of you, but you can't see them because you don't know what they mean. And then the key is you got to execute. The women in WealthyU who accelerate the faster, they execute, they do not overthink it. They'll hear me say something, boom, next thing I know, I'll say it. It happened the other week. I've been talking about defensive strategies and really investing in what are called the dividend aristocrats, companies that have increased their dividends for the past 25 years, are in the S&P 500. I mentioned that to one of our WealthyU members. I was talking about, she says, yeah, you mentioned that last week. I already bought it, right? So it's about taking action, but the most important thing is accountability and support, right? Oftentimes we don't do things because we talk. Listen, all I have to say is your biggest enemy is you're looking in the mirror at it. That weapon formed against you is not some outside person. It is you, because you are overthinking it. And so what I wanted to do, though, I don't want to just talk at you today. I want you to go away with something of value so that you can assess your own investor risk profile and you can understand. I'm going to give you some unique insights in here, right? So that then you'll be able to understand and anticipate things. So in the chat, Virginia, if you can just attach that profile in the chat. Pia says sometimes it is both. That's funny. Attach the risk profile in the chat. If you guys look in the chat, you'll see it, because Virginia is going to post it. and I want you guys to download it. And if you can't download it, don't worry about it. We'll post it in the LinkedIn chat, and you can do it later. Virginia, were you able to post that?
Yes, let me get it for you.
Okay. So I'm just gonna, so this is real easy. Okay, like this is, don't even overthink this, right? Like you're just gonna have to check some boxes, and from that, it's gonna give you a really, really good idea of how your portfolio is structured and what type of and what kind of volatility you should expect in it. So is it in there yet, Virginia?
Yes, it's there.
Oh, okay, perfect. So download that, guys, because I'm going to be going through it and explaining it to you. Okay, it is a clickable PDF. It is an Adobe file, so you need Adobe Read. If you don't have Adobe, then go and get it off the Google machine. All right, so let's get started, right? So that is the sheet that you're looking at, and we're going to answer these questions, and I'm going to give you some insight along the way. So the first thing I want you to understand is that, you know, I told you about Black Monday. Hold on. I told you about Black Monday when the market dropped 20% in one day. Then we had the collapse of the USSR. Then we had the Gulf War. Then we had the Asian financial crisis, which they still haven't gotten out of. Their real estate has finally come back to its where it was back then. And now with the current recession they're seeing. Then you guys remember the dot-com bubble burst. In fact, if we were to look at M&T Bank Stadium, it used to have a tech company. I can't remember the name of it. Ovita, you may remember it, but it was part of the dot-com bust. And then we had 9/11. And I just want you to see how the market reacts, right, to events, right? Then it goes back up. Then we had the global financial crisis, real estate decline. You guys remember that in the chat? If you remember these events, I just want you to acknowledge it, right? So then we had where the government wasn't going to pay the bill, and then the market went up. This is the S&P 500, by the way. It went up, up, up. Then we had Brexit, then volatility there, and then we climbed, and then coronavirus, COVID-19, right? So from 1985 to 2020, 25 years, we've had significant volatility. But if you were to look at this chart, what would it tell you? How has the S&P the trend is what? Up, right? You guys agree with that? The trend is up. So what I want you to understand is this, is that this is when you're buying more shares, right? Like if you're investing in your 401k, and we're in a dip right now, and some of you are how many of you are putting the maximum in? If you're putting the maximum, that's $19,000 a year. That's $1,500 a month, right? You're buying it twice a month, and then you're investing that money in there. And then when it goes down, I want you to just go take a look at your statements. You're going to be buying more shares at lower prices. That's how you win this game. That really is the secret. But the key is in how much risk you can take is, when do you plan to start withdrawing money from this, right? From your 401k, your investable assets, when are you actually going to need to draw money from it? And so you're going to score yourself on each of these questions. So if it's in less than 5 years, then I want you to give yourself 2 points. And if it's in 5 to 10 years that you're going to, now here's the other thing. Some of you, even though you're at retirement age, or you're going to be at 67 or something, you may not have to start withdrawing from that money yet. Maybe some of you, maybe you have Social Security, so I want you to really think of it, not your retirement age, but actually when are you going to start withdrawing money from it? And that's important, because then the goal for the money, if it is for your retirement or financial independence. I like to throw retirement out the window, but that's my own personal feeling, because I know that many people may want to work longer, may want to retire earlier. Just depends. So what the goal is, once you know the time frame, then that tells you how much risk you can take. But here's the other thing I want to tell you. You can't be too conservative, because I'm going to show you how that impacts you over time. And so here's what I want you to know. Like, if your retirement is less than 5 years away, then your risk level is going to be more conservative. And so what you're going to be is in growth and income funds, those large cap, those dividend aristocrat companies that are paying dividends. And so what I want you to do is go look in, if that is you, to begin to look at your choices that are in your retirement plan, whether it's with a company or an SEP or personal 401k, whatever it is, because your objective is growth and preservation, right? And so what I want you to understand is, let me just go back here. But if you're less than 10 years, then you can take risk, moderate, but you can have some growth funds, you can have some growth and income funds, you'll have some bonds in there. And so that's moderate risk. If you guys are following this, let me know if you're following where I'm going here. But if you have more than 10 years, it is important that you not get fearful right now, okay? And that you still have an objective of capital appreciation. And here's why: you're already seeing it. You're already seeing it with inflation, okay? Because your money, think about it. I was just thinking about this. I went in the store and I forget what it was specifically, but I know I paid 40% less just a year ago. Are y'all with me? So if I pay 40%, if I'm paying 40% more, and I'm up here with my little risk averse self saying, oh, I don't want to lose any money. I'm already losing money because my purchasing power is losing. So if I'm only earning 3% of my return on my investments, and that's the potential that I have, this is very, very important. I want you guys to get this. Then that means my money has to work harder so that it can, now I must say, let me just preference this, that we know that COVID has impacted the supply chain, and that's why we have inflation. Agree or disagree with me? Like, it's not like inflation, just everything decided to go up in value. There was an event that impacted the pricing that we have right now. And so much of it is supply demand. If you agree with that, I don't know about you, I ordered a couch. It took me 9 months to get it, right? Like that is a supply chain. And then, I'm glad I ordered it when I did, because now that same couch is costing a lot more. But so what you have to understand though, too, and I'll go over it a little later, is that the historical, if we were to look at inflation, historically, it runs right about 3 or 4%. Okay, like if we were to average it out. And so that's why our investments have to grow by more than that. Okay, so the next question is, once I begin withdrawing funds from my investments, how do I plan to use them over what period? Are you going to use them for the next 5 to 10 years after you retire, meaning you're going to deplete most of your savings? You're only going to give yourself 2 points. 10 to 20 years, you're going to give yourself 6 points. But if you're like most people and you're going to retire in your 60s, and then most of you will live beyond 90 now, right? Like when Social Security was created, they expected us to be dead, right? At 65. That really was our life expectancy. I just want you guys to get this. But what we need to understand is we're going to be taking from that money longer. And so to think that you're going to retire and then go put everything in the bank in a CD is ludicrous, because the way you're going to keep up with inflation is you're going to still have your money working and growing so that you can keep up with inflation. So score yourself there, give yourself points. Okay. So some of you may be thinking, how many are you thinking, well, how much do I need to have? Are any of you thinking that? If you are, this is a fabulous chart that Fidelity put together. And basically it gives you a sense of, if you don't have a pension, how much you should have saved based on your age and your income. Because the reason I like this chart is everybody's incomes are different, everybody's standard of living are different, right? So if you're at 45, you should have 4 times your income in retirement account. So let's say I'll just use round numbers, 100,000. That means you should have 400,000 in account, with the goal of you having 10 times your annual income at retirement. So if you're making 100,000, you need to have $1 million in there. If you're making 150, you need to have $1 million, 1.5. Now, a lot of this depends. Okay. Now, because I tell you, some people in our WealthyU programs have pensions, and it's a game changer. But for most of us, we don't have pensions. So, I want you to really get a sense. That's going to show you where your gap is, right? So if let's say you're 50, you're making 100,000, you should have 600,000 in your portfolio, right? And let's say it's only worth 200,000. We have that in WealthyU. Then there are only 2 things to do. You got to make that money work harder, and you got to put more in. But this is really designed to give you a sense of how much you should have at retirement, because this is the biggest thing. And this is the first time I've shown this chart, because basically this shows you how long your money will last. Okay, so you're like, okay, so if I have $1 million, how much can I take out each month? Well, or annually? Well, what many certified financial planners say, rule of thumb should be 4%. So if you have $1 million in assets, right? And let's say you could go only make a 5% return and you wouldn't run out of money, right? But if you start going, like you want to withdraw like 8%, and you're only earning, so the point of this chart is you got to earn higher returns in order to not run out of money, because these are the number of years. Like, let's say that you are only earning, let's say 5%. Okay. That you want to take out 5%, and you're only earning 5%. Then you're going to run, or you want to take more, you want to take out, this is the withdrawal rate, excuse me. You want to take out 11%, you're going to run out of money, right? So the more money you want to withdraw, the higher the return you have to get in order to not run out of money. So the key there is you understanding how to put your money to work. And so this is about experience and knowledge. So I want you to rate yourself and give yourself points. So my investment knowledge and experience could be described as: you have no experience, you have some experience, and you feel comfortable making decisions on your own. Like, you're in your 401k, you know how to go in there and pick some funds out, right? You're very experienced, that you have investments, that you know how to analyze and research stocks, that you have a portfolio outside of your 401k, then you're going to give yourself 8 points. And if you're very experienced and you manage your own portfolio and you have your own investment account, then you're going to give yourself 10 points. So you're going to give yourself a score. And just understand that this thing is weighted, right? So the way this works out is, the more knowledge and experience, the more assets you have, the more points you get, the more aggressive you can be in your portfolio. Okay. So if you remember, I know I only said we're going to go for an hour, but I want to go over this chart because this is very, very important. Because what this chart shows you is the historical return on assets. And so what it shows, this is inflation. Remember, I said inflation historically is about 3%. This chart goes from 1926 to 2019. Okay, so That's a long time, but all I want you to understand is look at treasury bills as a savings account. That's averaged about 3%. Look at government bonds as if you like your bond funds in your mutual fund, in your retire your 401k. Look at large stocks as what they are, your large cap mutual funds and small stocks. And this shows $1 invested in each of these categories and how it compounds over time. And so looking at this chart, what has paid the best return? Was it bonds, large stocks, or small stocks? In the chat, show me. What has paid the best return? Stocks, right? But at the same time, if you look at the line again, just like I showed you that other chart, it's had the most volatility. And so what you have to be able to do is understand that if you're going to beat inflation, this number here, then in order to beat inflation, you've got to be willing to take on this so that the trend is up and your money grows more rapidly. Make sense? Okay. So the next question I have for you then is, where is your current portfolio invested? Is it just in a money market account or the G account? I want you to only give yourself 2 points. Is it in treasury bonds or bond mutual funds, conservative? Then I want you to give yourself 6 points. If it's stocks and stocks mutual funds, then I want you to give your 8 points. But if it's all of the above, give yourself 10 points because you should have different eggs in different baskets. So if your portfolio consists of all of these things, I want you to give yourself 10 points. Okay. So why is that important? It's important because all your eggs should never be in one basket. I don't want you to look at the chart and say, man, stocks, large stocks and small caps, that's where I'm gonna put all my money. No, your ability to stay the course is gonna be so dependent on your comfort level, your risk tolerance. Okay, so this is just a rule of thumb. Back in the day, we used to say, take your age, subtract it from 100, and that's how much you should have in stocks. So if you're 30 and you subtract it from 100, you should have 70% in stocks. But if you're 40, you would only have 60%. But because we're living longer, even this is too conservative. So if you want to have a balanced portfolio, then you'd use the number 110. So going back to, rather than I being 40 and only having 60% in stocks, I'm gonna move it up 10 points and I'm still gonna have 70% in stocks. So the longer you have before retirement, basically the more aggressive you can be. But here's what I want you to understand, that all of those choices come with risk, right? So if you're really conservative, and let's say you only got 50%, that blue line is bonds, and then you've got the other 50% in US stock and foreign stocks and some short-term investment, your average annual return historically has been about 6% with this mix, right? Like these are what you would have in your mutual funds, but the worst 12 months is still down 18%. And we're there now, where even if you had a 50-50 bonds, 50 stocks, in any given year, you should understand that you're going to see your investments decline. You only lose if you sell by more than 40%. And if you're more aggressive, you should be willing to have the value of your investments in your portfolio decline by more than 50%, because that's just a function of how the markets work, right? But again, you only lose if you sell. So number 5 question, which of the following statements best describes your feeling towards risk? I make investments that I have a low degree of risk. I want you to give yourself 2 points. I take a balanced approach and I invest equally in high and low risk. I want you to give yourself 4 points. I want to be aggressive and I lean toward high risk, but I do have some lower risk bonds in it. So you might have like a 70, 30 or 80% in stocks, 20% in bonds portfolio. So I want you to give yourself 6 points. But if you say, I want the potential for the greatest return and I only invest in higher risk, I want to give yourself 10 points. You give yourself 10 points. Because this is why this is important. So I thought it was important to, let's put the numbers in a row. I mean, all of that sound very theoretical, but here's what happens. If you're like that should say monthly. If you're like the average investor is, because they're so conservative, their average return is about 2%. That's for all of y'all who are in the fixed, the G fund or the stable value fund, depending upon what company you're with. I want you to see how this plays out. So that's $12,000. You put in 120, you're at 140 in 10 years, right? In 15 years, you're at 246,000. But look at what happens when you change your allocation and your average annual return and you're compounding, just going back to that historical return on charts. That's why I show you guys that, because you saw that's what large cap stocks do, right? Like your large cap mutual funds, they've historically done 10%. Look at what happens. What I want you to understand is being too conservative is the difference between you having this and this, right? Or this and that. And some of you may be contributing more. I just used the $1,000 a month. That's $12,000 a year. That's not the maximum that you could contribute to your plans. And for those of you who are over 50, you could say 26,000. And so if you're putting $2,000 in a month, that number extrapolates consistently. So the question I have for you then is, if the stock market fell 20% and your investments followed suit, what would you do? Would you liquidate it right now? Are you considering getting out of the market? That's the question I have for you today. That's why I wanted to do this assessment in particular and give yourself 2 points. You would sell half of it and say, oh, I don't want to see all of it go down, and leave the rest. You would leave it alone, or you would buy more. So 2, 4, 6, or 8 points. Let me just stop for a minute. What's going on in the chat? I thought I saw somebody who said, I thought I saw somebody who missed it, but at any rate, it's on the sheet, right? So give yourself points for that. Because here's what I love this chart, because I like to show other times when the market was like we're in now. And so this is back during, y'all remember 2008, right? Very similar. So you have $4,000 in your 401k. What you saw was it declined. That was about a 20% drop, almost 25%, because now you're at 300,000. So the green line is if you stayed invested and you continued contributing, down here. Then when you came up, you were much further ahead. You were at 500,000. But you moved to cash, but you continued contributing. So that's this line, right? So, and then you just moved it all to cash. You ended up right, the market, you did gain some interest, but this is really to show you that staying the course is typically the way to grow your money. And so it's never too late. Like this is at age 50, it's still never too late. And we see it in WealthyU. We've got women who have doubled, who are hitting 7 figures now, even multiple 6 figures, beyond 7 figures. And this is just showing that just whatever you can afford to do. If all you can do is, that's $500 a month. I mean, that's about $500 a month. Bi-weekly, that's $460. That's a Roth, you can put $6,500 in it now. 401k, you can put almost 19, well, you can put 19.5 in. And this is if you wanted to marry the two, where the two of them bi-weekly. I just said that's $1,000 per bi-weekly. What I want you to understand, it doesn't matter, just do it, right? Just start contributing. You're going to be so much further ahead. Good. I'm trying to land this plane. I know I'm going fast, but I want to be respectful of your time, right? And so here's what I want you to do. Based on your score, I want you to add your scores up in the chat. Put your scores in there so I can see. Stephanie said you need the first question. Well, if you missed the first question, it's on the actual sheet if you downloaded it. So I want you to score yourself. So if you have 50 or more, you could have an aggressive portfolio. And that means you could actually have 85% of your stocks and 15% in bonds. Okay, excellent. So you're 38. So Ovita, you would have a balanced portfolio, right? So the point is that based on this assessment, I want you to go and take a look at how your investments are allocated right now, right? Like, so Michelle, you're conservative, 20 to 29, you'd have a balanced portfolio. And so this basically, for conservative, you've had 50% in stocks, 30% in bonds, 20% in cash. Balanced portfolio, 50% in stocks, 40%. Why would you have money in cash? You would want money in cash because, like right now, when the market's down, you could reinvest that cash. So I hope this made sense to you, all of you, because what I want you to understand is the volatility that we're seeing, the economic, inflation going up. Certainly, I'm older than a lot of you. I remember when mortgage rates were at 9 or 10%, right? So it's just a function of economic cycles. But one of the things we learned that I teach in WealthyU is that it's the law of polarity, right? If there is good, there is bad. And so what you need to be able to look at, what is profiting from this current situation? And that's how you win the game. So I just wanted to share some inspiring stories with you. This is Dr. Sharon Deans. When she came to WealthyU, she had a negative net worth. She negotiated an exit package that got her out of debt, then went to a new company making more money. She paid off all her debt. It allowed her to put $50K in savings, and she's increased her net worth to over $1 million, set up her own living will and a franchise. And that was just in a couple of weird years. That's what I want you guys to know. It's just knowing the right things to do. I had to move that because I had audio in there. But by the way, this is Belinda. She's over 7 figures, just so you know. This is Dia. She was just investing in her 401k. She learned how to analyze and research stocks. Now it's on and popping. And the point I want to make is that no matter where you are on the spectrum, by applying the right concepts, you can accelerate your financial growth, even in down markets, right? Even in declining markets, when inflation, you learn how to take advantage of, look on the other side, look at where things are going. And that's like right now, there's just a flight to safety there. In WealthyU, we're studying dividend aristocrats, dividend kings, growth in income, ETFs. This is Kim. Kim, avid investor in real estate, learned how to build a significant investment portfolio. Now she just launched her venture capital firm and is raising $10 million for early stage companies. So the only point I want to make is that if you want to hear these women's stories, check out our new show, Get Wealthy, on the Black Star Network. They tell you in their own words. But here's what my gift to all of you is that you have done this assessment. If you just want to have a strategy call with me, you can either take a picture of that QR code or, what did I do here? That whole link didn't show though, hang on. The link is, let me figure out what that link is. It's https://bit.ly. Were you able, guys? Yeah, that's even better. Thanks. Just use the Linktree link, guys. It's our Linktree link is Linktree. It's WealthyU. If you go there, you can schedule a time, but take a screenshot. If you guys need some, want me to give you some insight on what you're doing right now, there's no charge for it. We're a community. What I don't want is I don't want you guys getting fearful of this market and doing something rash. You know more than you think you know. I also want to invite you to join us in our WealthyU community. You can click on that Linktree link and you can learn all about everything we do. We're always doing something. We have a Get Wealthy watch party coming up this Wednesday evening. I want to thank one of our ambassadors, Virginia Rutherford Hall, is here. She's the one putting all this information in. She's got an incredible story herself, just about how she's been able to accelerate her own financial growth, being a part of WealthyU. But we're dead serious. We're on a mission to help a million women get to $1 million in assets. And the reason for that is because the most important asset of all that you can pay for to your family is the knowledge of how to build wealth. Are y'all with me? Does this make sense to you? So with that, for those of you who want me to answer some questions, it's Q&A, ladies. I'm gonna take myself off of pen, and then I want to hear from you guys. What did you think about the presentation? Do you have any questions? As you can see, I love doing this, and I love seeing women apply what they learn. So you can raise your hand and I will open up, or you can put your comments in the Thank you, Ovida. It was clear, concise, excellent, fantastic. No problems, Carmela. I know you guys are all at work, but listen, if you have any, if you want to learn more about the amazing community that we've built, feel free to join us in the WealthyU community. We would love for you to join us and learn how women are accelerating their financial growth to 7 figures and beyond. Liz has a question. Go right ahead, Liz. I'm going to ask you to unmute.
Hey, Deborah, this was fabulous. Thank you so much. Learned so much. I'm probably in a different space than a lot of people, as you know, but I wondered if I could get that QR code again. I wasn't unable to grab it when you had it up, or will there be a follow-up email where I can get that information to touch base with you?
Absolutely. Let me, can you put the link tree, if you take the link tree that's in the
Invite?
chat, yeah, that link tree, there's a link tree in the chat that Virginia, look at Virginia's
Got it. Thank
yeah,
you.
you got it. And it'll take you right to our link tree and give you access to, all of our training. You can get on my schedule. By the way, I got to give Liz Johnson a shout out. She's my interior decorator with the mostest. I was just telling, we had our friends here from Southern Florida, and I was showing them all the things that we've got coming. And by the way, she has a crowdfunding campaign going on. I'm always supporting women. Liz, put your crowdfunding campaign link in the chat.
I will do that right now. Thank you so much, Deborah.
No, my pleasure. Let me just tell you guys. Now, I just think I know how to do all this stuff, but I was just going around in circles. You know how you think I like this, I love this, I like this. Then you taking stuff back and forth. And Liz came in, she got me together, gave us a plan and a strategy. And her claim to fame, though, is she knows what to do with small spaces. Right. So thank you, Liz. I'm glad you put that in.
Thank you, Deborah.
Any other questions? Ovida says, I'm going to make an appointment with you. Fantastic. Ovida, it's so good to see you. I miss seeing you. COVID has just got us all in our little caves. Any other question? Any hands raised? Outstanding. Well, ladies, thanks so much for joining us. I hope this was of benefit to you. And as always, I mean, if you're with an organization and you've a company and you'd like to have us come on and present this kind of information to your network, if you're within ERG group, I do a lot of that work. But I just want you all to know that with problems come great opportunities, and shifting to the wealth mindset is really how you make it happen. I hope to chat with all of you soon. Thank you so much for joining us for our recession-proof your portfolio. And again, I hope you join us in the WealthyU community. That's going to do it for me this afternoon. You guys get back to work, make that money so we can turn that income into assets.